So hey everyone, in the last video we talked about what financial modeling is and why it matters. And today it's time to build your first free financial statement model. So it's the main skill in finance, whether you're doing investment banking, private equity or corporate finance. So first, what is a free financial statement model? A free statement model links a company income statement, balance sheet and cash flow statement. The goal is to create a dynamic model where everything flows together. So now let's see how to build it. The first step is to set up the assumption. Start with assumption. There is the foundation of your model. So some typical inputs are the revenue growth rate, the gross margin, the operating expenses, depreciation and capex, tax rate, change in working capital, debt, and interest rate. These inputs will drive the rest of the model. So the step 2 is the income statement. Now let's build the income statement next. Starting with revenue, cost of goods sold, gross profits, operating expenses, EBIT, interest expenses, pre-tax income, taxes, net income. The third step is the balance sheet. Now let's see the balance sheet. The balance sheet is composed with asset and liabilities, which when you subtract them, you need to have an equal amount of the equity. The assets, there is the cash, the account receivable, percentage of the revenue, inventory, percentage of cost of goods sold, and the PPE, the prior year plus capex minus depreciation. Then you have the liabilities, which is inverse of the account receivable, the account payable, and debt, which when you subtract the asset from liabilities, you have the net asset and need to be equal to the equity. The equity is the retained earning. Now the cash flow statement. So the cash flow statement is calculated using the indirect method. With the cash flow from operation, start with net income, add back depreciation and subtract change in working capital. The cash flow from investing, subtract capex. And the cash flow from financing, add and subtract debts, subtract dividends as well. Then the net change in cash, sum of all three sections, ending cash. Okay, and now the final check and formatting. To final check, you should ask yourself those type of questions, like does the balance sheet balance? Or are your links dynamic? Can you change an assumption and see if it ripples through? Format everything neatly. It's a big deal in finance. So now that you just build a free statement financial model, the essential building block of all advanced finance. In the next video, we'll look into LBO model and how private equity firms evaluate deals. Thank you.